I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending April the 29th, brought to you in part by the American Simmental Association, which is the founding partner of International Genetic Solutions, which represents 12 breed associations and has the largest pool of beef genetic evaluation information in the world with over 16 million head. Check Simmentals out at simmental.org. We just have no stability in the cattle market right now, especially with the futures market, and we've been harping on that for the last several years, but there's just no stability in it. All volatility, it can't withstand any kind of pressure at all. It's so vulnerable to having the legs pulled out from under it, and you can't rely on it to try to withstand any kind of pressure at all. About the same with your cattle feeders. They just continue to give up any kind of leverage that they may hope to gain as the ways things go, and then the packers continue to outtrade them, and it's just really not even fair. But you look at the cattle futures this week, live cattle futures on the June contract, which is now the spot market at a $10 discount to the cash market, which is poor also. But June live cattle up 12 cents on Friday to end the week at 114.92, which is up 27 cents for the week, as bad as it was. Feeder cattle May contract, which is now also the spot market, and quite a bit, getting closer now, but just a little bit under what your cash cattle are trading. But May was down 15 cents to end the week at 140.42, which was a loss for the week of just over $2. But your CME feeder cattle index is 144.30. Real-time index on Cattle Market Central is 141.77, including all of Friday's sales, which were also lower. Your fat sold mostly on Thursday and mostly at 124 live, which was $3 lower than the $7 lower a week ago. So that's $10 in just 2 weeks. Your dress market is 196, $2 to $4 lower than last week, and roughly $20 lower than it was 2 weeks ago. So that's what's been going on in your cash fat cattle market. This week you just had a lot of feedlots going in and trading on a 3-week delivery, something like that, at a market that's some lower than what the spot market is right now, but still quite a bit of premium to what your June live cattle contract is. And that's really what's one of the things that's wrong. There's many things that's wrong, but one of the things that's wrong with your futures market, here we are in the spot month at a $10 discount to what cash is, and cash is really a weak market, and it's $10 lower in the last 2 weeks. So, you know, when we've got people doing risk management off that, sure, your feedlots are going to go out there and sell cattle at 124 with a $10 basis to put in their pocket, which is bad enough, but they're going out and selling cattle for 3 weeks out front, just maybe at 121 or something like that, which is still a nice basis to put in their pocket. But you've just given up all your leverage to the packers. What's the hope of trying to hold this thing together in any way, shape, or form when you've already let them get their schedule lined up for the next month? And you know, you just look, the packers really have not lost money any week so far this year. Usually always in the first quarter they have a hard time trudging through some of that weak marketing there in February when everybody's down in the doldrums after the holidays. They made money right through there, making money second quarter. Now we're getting into all your grilling demand and everything, and now they're starting to ramp up the kills, which is pulling back your box beef just a little bit, but still just making money hand over fist, and the cattle feeders can't wait to help them do it. But you know, big slaughter the week before last, and then an even bigger one this week with 590,000 head slaughtered for this past week, which was the largest weekly kill since August of 2014. You'd think that we'd be pulling cattle forward, and boy, the feeders would be getting all kinds of leverage to trade on and get this fat cattle market put back up. None of that's coming on. They've already just basically handed them a kill schedule for the next 3 weeks or a month, so not going to be able to get any leverage back. But that 590,000 was 3,000 more than last week's big kill and 26,000 bigger than the same week a year ago. Now, the larger kills are putting some pressure on your box beef cutout values, but still packers are making a lot of money off of it. But choice boxes on the weekly average for last week was 215.51, which was down 676. Selects have really been taking it hard. Selects were 206.31 on the weekly average, down 696. But cash feeder cattle, we're not able to hold anything together. Even on the up market on Monday and Tuesday, your early week sales still had a lot of lower to catch up on with the big losses late the previous week and most of your other sales. So we knew that those early markets were going to be lower, and they were. And even though the board was up pretty big, the volatile board was up pretty big on Monday and Tuesday, it didn't keep them from going down. And then your late week sales were just kind of weak for the most part, and just kind of even things out. So we could start over fresh this coming week, but there's just no support anywhere to really try to give us any higher prices. But cash feeders into the week last week, pretty much throughout the whole circuit there, $3 to $7 lower. You look at some markets, look at the Pratt, Kansas report on Cattle Market Central there. You see where don't pay any attention to the light calves, but look at the yearling prices. That's all those cattle coming off graze out wheat. And your 7 and 8 weight cattle, where the biggest numbers are and your biggest volume is, really wasn't lower. It was actually steady to firm, maybe a buck or two better in places, because that was one of those Thursday sales that took the brunt of the losses the previous week. But you look at the heavier yearlings, those 9 weight cattle, another $2 to $4 lower, and a lot of these graze out cattle coming off are weighing in the 9s. The big steers are. But now you look at a bunch of those load lots represented there in those individual sales there. All those upper 8 and 9 weight steers there selling from $127.85 to $137.75, and that's a long ways back from where we was trading them just not too long ago. Just now getting back home from going out to Athens, Tennessee, and speaking to the Southeast Tennessee Beef Summit group there. Had a good time doing that and was able to travel around Tennessee a little bit. Want to encourage you, like I did that group there, to go onto your app store on your smartphone and download or install Beef Market Central, or BMC, if you haven't already done so. It's probably the best phone app for people that are in the cattle business. It has, of course, all your board and all your major meat and cattle market reports right there. It has a lot of news on there, a lot of weather, and if you use Merck Animal Health products, you can become a One Merck Animal Health customer and achieve a choice or prime level of status on Beef Market Central and get to some real-time markets right there, including the feeder cattle ticker, which is really the coolest thing that we've ever come up with yet, but through DV Auction there, and has over 100 sale barns on there. Just shows every lot that's coming through those sale barns as they're going on, and you can watch it right there on your phone, and just continuously updates. But from home office here in Maysville, Missouri, we'll talk to you on Wednesday.